All right, what up, everybody? This is Jeremy with Escape Velocity Trading coming at you from another market bias update report for Sunday, May 4th. Before we dive into the charts, looking at last week's trading, ended up losing 2,735 this past week over 10 trades. You can see here, ended up having more winning trades than losing trades, but my losers ended up outweighing the winners this last week. Mostly just having a hard time gauging the day trades that I was jumping into. Got whipsawed in and out a couple of times on a couple of fake outs on breaks of support. Anyways, not too bad. Loss of 2,700. That is well within risk parameters for my style of trading. So onward to looking at the charts. Diving right into the S&P 500, we are approaching the 200 period moving average, which should be assumed to act as resistance. We also have really important price points in this zone as well. And if we toss this out to a weekly chart, you can see we are coming into the lower end of the 50 period moving average and the decreasing 20. So my base case is for a little bit of stalled momentum at this level. If nothing else, going sideways for a few days to start the week, but I would tip my hat a little bit more towards the bears this week, looking for a retrace, maybe down into either the 550 level, or if that breaks down to the 540 level. Going out to the triple Qs, this is the Nasdaq. Rinse and repeat, same thing. We are at that 20 period, 200 period SMA, which is very, very important to the market. If we toss this out to a weekly chart, again, we have that same 50 period moving average and decreasing 20 just above. So looking back at the daily chart, looking for consolidation anywhere that stays above 460, I'm going to consider a win for the bulls, but I am expecting a decrease in price overall this week just to digest a lot of these strong gains that we have had off of the lows. Going out to IWM, IWM actually crossed above its 50 period moving average here on the daily chart and has quite a bit of room, almost 8% of room to the top side to catch back up to the other two indexes we've looked at so far that are already pressing into their 200 period moving averages. If we go out to a weekly chart, you can see we are just barely above the 200 on the weekly, and we have a decent amount of room up to the 50 and the 20 as well. So out of the three that we've looked at so far to the bull side, I like IWM the most, looking for a little bit of catch up, probably coming back and ending the week this coming week somewhere around 209. Going out to the Dow Jones. Dow Jones bumping its head on the 50, have a little bit of room up to the 200 period moving average, have room still on the RSI, and MACD is starting to switch back into bullish territory. If we toss this out to a weekly chart, you can see we are approaching that 50 period moving average, but have not actually hit it yet. I am guessing that we are going to touch on that sometime early this week and then start to roll over a little bit. Any consolidation above 400, I'm going to consider a win for the bulls. Going out to IBIT, looking at Bitcoin, overextended to the top side here, would really, really like a small pullback coming back down to test maybe that $52 to $53 level. So just a couple of bucks lower than where it is right now, but I really do want to see some consolidation here before we move higher so that we can actually reset the risk to reward, we can reset our RSI, and we can get a really good entry. If we have price pullback anywhere between $50 and $52, I'm going to consider that a buying opportunity this week or next week. Going out to Ethereum, nothing really to see here. Coming off the lows, it's going to follow Bitcoin and the rest of the market, whichever direction it tends to go. If we do get back above the 50 period moving average here, which is at 1451 on the daily chart, 1451, we would be just shy of breaking above the 9 EMA on the weekly chart. I am going to be waiting to add to a long-term position on this until we get a weekly close above that 9 EMA. We are testing above our diagonal resistance here, but just need a little bit more development. Going out to our building materials, XLB. Looking at the daily chart, got back above the 50, have quite a bit of room here until the 200. We are still in this downward pressure trend, and we still have a diagonal above us. Not super interested in playing this area of the market this week, especially since we were overextended to the top side on the RSI. I do think we need a little bit of reprieve here before this is going to be playable. Going out to discretionary, discretionary actually shaping up a little bit. We are pressing up into that 200. Same thing though for the other indexes that we've already looked at. I do want more consolidation, and I don't see a very attractive setup here until we get a few days of consolidation. If we get a few days of consolidation and then break above 205 later this week, I would be really interested in a break at 205, probably playing that up to about 220 over the next couple of weeks. But I do need some more consolidation here before we break that 200 period moving average. Going out to tech. Tech pressing right up into really important support and resistance lines here. We do have the 200 period moving average above us. We are also overextended slightly on the RSI, and our MACD has finally reclaimed back into bullish territory. If we drop this one out to a weekly chart, you can see it looks very, very similar to the triple Q, and we have both our 20 and 50 SMAs above us on the weekly time frame. So I'm expecting this 220 to 221 level to hold as resistance and to give us some more consolidation here. Any price pullback into 208 to 205, somewhere right in there, I'm going to be considering a good opportunity potentially to dive in and start scaling into some longer term positions. But I think we need a little bit of time on that first. Going on to energy. Energy last week basically just consolidated within the same range we've been in for a couple of weeks here, looking for a break on one side or the other. I do probably favor the bulls slightly from where we are right now, but not a strong read one way or the other. I think there are better areas of the market to play than energy this week. Going out to XLU. XLU shaping up. We are pushing up into an important price zone right here, basically anything between 80.56 and down to 79.80. Won't be surprised with the price anything in between those two levels, but if we do break out above that $80.60 zone, I might be interested in playing a quick trip back up to 83.40. XLP consumer staples, nothing to see here, middle of a choppy range. And until we get a little bit more pattern development, I'm just not interested in this sector at all. XLC has been recovering well. Did get back above our diagonal resistance. We toss this out to a weekly time frame chart. You can see we only have one more moving average above us of importance. That is the 20 SMA in blue, and I would expect a little bit of a fight here, but I am expecting this to resolve to the top side, so I am interested in a breakout above that 20 SMA. We're just going to call that $98. So if we get back above 98, I will be interested to play that to the top side, but I really would love a little bit of consolidation or a little bit of a flag-based pattern here first. Going out to XLI. XLI got above all of its moving averages on this rebound, including the 200 period moving average. It is overextended on our RSI. Our MACD is crossed back into bullish territory. And again, just like all the others, I want consolidation. It is looking like this week is going to be the story of consolidation and wanting to wait for consolidation. Sorry about the alarm there, guys. Yeah, overall, 2, 3, 4 days would really clean a lot of these charts up. Doesn't need to be much, but I am guessing most of this coming week is going to be just simply waiting for pattern development and waiting for consolidation to occur. XLF is no different. Switching out here, we have broken above our diagonal, but again, we've already kind of run and left the station from that initial breakout of 48.70, and I want some kind of a retest back down to that 48.50, 48.70 zone before trying to continue higher and trying to make a play on that. Going out to XLV. XLV stuck in a range here, not super interested in it one way or the other, doesn't give a strong read on the daily chart. If we go out to the weekly chart, this is honestly a little bit weaker than I would like to see in terms of the weekly time frame chart. We are still bearish, and this could be just considered a bearish retracement back up into resistance. So I am not interested whatsoever in this sector for this coming week. Going out to gold. Gold's just been chopping back and forth a little bit at the high end of the chart. It needed to take a breather here after running so hard from 240 on up to 317. So this seems to me to just be simple consolidation at the top end of the range. I am expecting this to eventually move higher once again here. I do not think this is the end of this bullish movement, but I am expecting that we probably have another week to 10 days of consolidation and maybe slight pullback, probably coming down to test the 50-period moving average somewhere around 288 would be my guess. Going out to silver. Silver rolled over here after a really strong recovery and is just kind of in the middle of this single big drop that we had on the initial news of tariffs and all of that nonsense. Don't have a strong read one way or the other. I do eventually see this resolving to the top side, but I wouldn't be opposed to seeing it come back down to that 2830, 2840 level and giving us a support build on that 200 period moving average. Last but not least on our charts, going out to the dollar, we are seeing a little bit more stability here, but it is not out of the woods yet. Obviously have several diagonal resistance zones above us, as well as a couple of really important moving averages. And this is just a stay away chart for me right now, but it will be impacting the overall broader market. If we can get some stability here, that would be nice. After such a big drop, I want to see some of the volatility come out of the market, and I am looking at the dollar as a cause of some of that volatility. So waiting to see if it can chill out and hold support here for a little while. Finally, going out to FinViz, let's look at our heat map. This is 1 week performance from last week, and you can see a lot of green coming back into the market. A lot of different companies and various sectors were consolidating and slowly starting to creep back up. We did have a pretty sizable beat in Microsoft due to earnings, also in Meta due to earnings. Few of these other tech sectors, we did have overall positive earnings for the first quarter so far. So looking for that trend to continue. Going out to Forex Factory for our economic calendar coming up. Monday, we have services PMI. Nothing on Tuesday. Wednesday, we have funds rate, FOMC statement, and press conference. And Thursday, unemployment claims. So all eyes are going to be on the FOMC for Wednesday. So with that, guys, as always, trade safe. Let me know if you have any questions. Hit me up in the comments. Give me a like and share if you find this content helpful. And I will catch you next week.